Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to talk about one of the most important Greeks that an options trader can use, especially as you get into a given expiration, be it monthly or weekly, and that is Theta Decay. So when you start looking at ideas like this, and I love trying to find tickers that are revolving around a key psychological area, be that something like $100 or maybe $150, or in the case tonight of AGN, we're sitting here right at 200. So you're just trying to find a level where, stock buyers may kind of battle it out, and that tends to be a good spot to do it. Okay, so we've got the psychology of that laid out. Then you come back and take a look at the chart itself. Is this a fairly range-bound chart? I would go ahead and say yes on that. You can see that it's had a sharp sell-off, rebounded all of that, and at the end of the day, or as we sit into Thursday afternoon, I also think about the psychology of this, where everybody that was long was shaken out. Everybody basically just shook out both sides of it, and you're kind of resting right in between that as you head into expiration. Okay, that's enough of the psychology part of it. And then when you come in to actually look at the options themselves, you'll notice that you still have some pretty good premium in this. At Thursday's closing prices, the $200 calls aren't really worth anything because you are still $2 out of the money. As far as the $200 puts go, they are trading here at $1.35, but they're truly only worth 2 cents because that's how far you are in the money. So this is what we're trying to take advantage of. Essentially, you set this up with the idea of doing something like a short straddle. So you sell this to generate the credit, and then you buy those opposing strikes to protect yourself in that spot. And then when you come back and look at your analyzed graph, this is where everything really starts to make sense. So we're trying to be as delta neutral as possible while giving ourselves some positive theta, and that's one of the main things you want to look at into tomorrow. Then I like coming in and setting my slices to break even on the day of expiration, so I get a very clean feeling for where I am as far as essentially just saying that anything below 202.65 I'll break even to the bullish side of things, and then anything above 97.36 will protect me to the short side, and then if we can oscillate there around 200 into tomorrow, it's a good way to try to pick up, $1 overnight, and then potentially a little bit more if the market will go in our favor. So that's the way I like to manage it. Peel a little bit off at the beginning of the day, hold the remaining piece into the afternoon to see if you can actually pin at 200, and then when you do finally get to that spot, remember that you don't have to close out the entire trade. You can come into the Iron Condor, create a closing order, and then at this point all we want to do is buy back that straddle as cheaply as possible, let the wings expire. That'll help you save some commissions and ideally retain the most credit on that trade. So I hope you found that helpful. If you'd like to dive into this stuff a little bit more, Bruce does have one more day of the live trading that he's going to be doing associated with his course. So if you've missed the first part, you can sign up for this. You will get the recordings of the live trading that has already happened and the recording of the strategy, and then have the chance to trade with him live on the 21st. So I hope that helps, and if that's something that interests you, you can absolutely sign up at the end of this video, and I will see you at the next free Outlook.